So today we're going to talk about the impact of interest rate changes by the Federal Reserve as it relates to home builders, homeowners, and landlords and renters. It's important that you look at interest rates from all perspectives because it does affect everything a little bit differently. So let's look at home builders. So the first thing that we're experiencing, of course, as you guys know, are the material and the labor costs are way up. From higher interest rates, higher gas prices, then all of these things get poured into the construction project itself and make the construction projects higher. In fact, if you go to the National Home Builders Association, you'll see that just last year, home building prices went up by over 26% in 1 year. So why is that important? Because if this home here, as pictured, let's say is around $300,000 or $400,000, this could be $70,000 to $100,000 more just to build it than it was 1 year ago. And I can assure you that the home builder doesn't eat that cost. It passes it on to the consumer in the form of price appreciation or inflation or whatever you want to call it. Then, of course, that home buyer has to get a loan, which is now more money, and the loan payment's more because of these interest rates going up. 2, the supply chain is a mess. And I'm speaking from personal experience because we have 6 construction projects going right now. So it's very, very difficult right now to get things like lumber and concrete and appliances. All the things that we took for granted before are really difficult to get. And of course, when we get them, they're more expensive. And of course, the homeowner's paying for it eventually. The third thing, which isn't talked about a lot, are these land costs. Land costs are going up dramatically everywhere. And why is this important to you? Because if this land right here costs the developer $100,000 or $200,000 more, it now goes to the consumer who pays eventually for the price of that land anyway. So when you are building, it's literally just land plus construction, and that is the cost. And then, of course, there's a markup above that. So land is a big issue when it comes to building homes. Borrowing costs are up as a result of these interest rates. Of course, builders that have lines of credit or borrowers that are trying to buy properties like this, their mortgage payments are going up, keeping them further and further out of this new construction market and pushing them into existing homes or even rentals. So as a result of these things, we're definitely going to have a future supply of housing. And that's on the heels of already over 5 million housing unit shortage, as we've talked about in prior videos. So these home builders, they're experiencing these high costs, which is eventually going to be passed on to the consumer, and therefore we are going to see less new home buyers, especially now that it's going to cost more to buy this house than it was before. And don't forget, the Fed has also said they're going to continue to raise rates throughout this year. So now let's take a look at the homeowner. What are they thinking? Well, the first issue that they have is that most of these folks, if they've been in their home for a while, they're probably sitting on a much lower rate, a much lower payment, and they have probably some equity, in some cases, lots of equity. So their decision is, if they sold their house, they have a capital gain, and they make a lateral move, they're actually getting the same house for a higher payment. So therefore, we're going to see a lot of these homeowners stay put. My prediction is that we're going to have listings go down even more over the next couple of years as a result of this. I don't see affordability going away anytime soon. Remodels are going to continue to spike, but they're going to be tempered by all these supply chain issues with regard to the labor costs and the material costs and all of those kinds of things. One thing to watch for here is the government is already coming after us for the property taxes because they've taken massive tax hits in lots of these spots, and the landlords, the homeowners, are low-hanging fruit for increases in property taxes, which we're seeing across the nation right now. The last but not least category are the landlords and the renters. And so what's going to happen here, and what we're already experiencing, is you're going to see less acquisitions because of higher interest rates. So think about this. You have your income, you have your expense, and then you have your debt. If your debt costs are more, then your cash flow is less. Less and less of these deals are now penciling when just several months ago the rates were significantly lower, and now they're close to 5%. So the cost to borrow, whether you're building something new or you're buying something existing, is going up dramatically, which is pushing more and more deals to the side, and we're seeing a shift from the sellers now to the buyers as a result of these rising interest rate costs. As cash flows continue to go down as a result of rising interest rates and mortgage payments, as well as property taxes, utility and energy and all those things, the cash flow on these deals, when just a few years ago were much higher, are now going down dramatically. Those of you that are looking to build or even do a value add, this cash flow is now a serious issue for you, because not only do you have the higher interest rate on the loans that you're using to borrow these properties or to buy these properties or to build these properties, but we're starting to see higher renovation costs, higher construction costs, higher labor costs, higher energy costs, higher property taxes, higher insurance rates. Those kinds of things all shrink down the cash flow. Then, of course, the investors are now looking at cash flow as it relates to cash on cash, which is, do I want to invest the money because I'm not getting the cash flow that I once was before because of all these prices going up? So unfortunately, that's going to lead to a lower supply again, which is the worst time for this to happen, because what we need are more units and more housing to offset some of these high rent prices and some of these high housing prices. But as a result of these things, the higher borrowing costs, the higher construction costs, we're going to see a decrease in the supply of housing over the next couple of years. As a result of this lower supply, you're going to see higher rents. Unfortunately, the one thing that combats higher rents is supply. And so as rents go up, and they will, because supply will go down, now the renter is going to feel a much bigger effect on their affordability, and they're probably going to downscale or not move as much, and they're not going to be as mobile as they once were before, of course, depending on what happens with their individual rent and the wages that they make. One of the greatest things is buying your first home. And unfortunately, because of the low supply and the higher rent, one of the things we're going to see is less renters buying homes as a result of the higher interest rates. And of course, their wage growth staying the way it is. It's going to keep people in rentals. As you guys know, I did a whole video on this called Renters Nation. As we start to see the home ownership rate in the United States tick down, unfortunately, it's going to grow from the renter base, and the rents themselves are going to grow as well. So this will be a very good time for landlords if you own something. It will not be a very good time for renters, unfortunately. And this system is very out of balance. Lastly, I'm going to touch on inflation, because it does affect landlords and renters. So as renters experience higher prices for gas, higher prices for food, and landlords that have floating rate debt, as an example, and their interest rate goes up because the Fed is raising the rates, then of course their costs go up. Now they're kind of forced to grow their rents as well. So all these things affect everyone a little bit differently. So as the Federal Reserve continues to increase rates, as they say they're going to, I just want you to keep your eye on all of these things, because whether you're a renter, whether you're a landlord, whether you're a home builder, or whether you're a homeowner, all these interest rate changes have significant impact to you individually, and they all have ripple effects of the things that are going to happen in your own respective area. As always, thanks for watching. Don't forget to hit the like button or the subscribe button, and I'll see you in the next video.